Good morning, traders. It is 7:13 a.m. Central Time, 8:13 a.m. Eastern U.S. Time on Thursday, the 8th of September, 2016. This is a pre-recorded trader bite. Of course, again, I'm still having some broadband issues and cannot stream these from home. Thanks for joining me anyway. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Key news overnight takes us into the more discussions out of the Bank of Japan. The Bank of Japan's to discuss whether there's need to change policy framework to review what has impeded the price target. There's just very little progress on, despite the negative rates in Japan. ECB leaves the main 7-day refi rate unchanged at 0% as expected. Leaves the deposit facility rate at negative 0.4% as expected. Marginal lending facility at 0.25. I want to remind you, well, by the time you see this, it's already happened, but in about 15 minutes at 7:30 Central, 8:30 Eastern, we got ECB's Draghi. ECB statement reiterates to continue 80 billion euro per month asset purchase program until March 2017 or beyond if necessary. No change in current timeline. There's not much more to talk about going into the session here. China's trade surplus narrowed slightly. China's steel production is about to fall further behind schedule. The UK has decided it'll take its time with Brexit. We will not take decisions until we are ready. We will not reveal our hand prematurely, and we will not provide a running commentary on every twist and turn of the negotiation, says the UK's Prime Minister May. But that's really it on news as far as what we're expecting today. Again, initial claims and ECB's President Draghi coming out in about 14 minutes now. Initial claims expected at 265,000. Continuing claims expected at 2.151. We're looking for natural gas at 9:30 Central, 10:30 Eastern, as per normal schedule. But because Monday was a holiday, the crude oil inventory number has been moved to 11 o'clock Eastern, 10 Central today. Crude oil, we're looking for a surplus of 1.01 million barrels, a surplus of 1 million barrels in distillates, and a negative 500,000 in gasoline inventories. And then in the afternoon, we're looking for consumer credit at 2 Central, 3 Eastern. And that's really it for today. For those trading treasuries, there are two key auctions that take place at 10 Central, 11 Eastern. The new 3-year note and the announcement for the 10-year note and 30-year bond. And those happen at 10 Central, 11 Eastern. Let's switch gears here and look at what was expected yesterday. Fortunately, I did not prepare this video because I forgot, but here it is. Okay, let's look at this. Here's what was expected yesterday. I posted these again pre-market. It turned out that there were no markings on here. I did prepare markings though. Hang on one second. Bear with me. Let me revert back. See, when things drop out of the normal routine, they get a little bit chaotic, unfortunately. So I'm not going to review yesterday, unfortunately, because I just don't have those. Images in front of me, and I don't want to keep fishing around for them. Actually, I do. Here we go. All right. So let's look at these. Here's what I posted yesterday on Twitter. The primary hypothesis we're looking for yesterday was for a test up and then for the market to start pushing down towards towards the MCLV zone down at 2172.50. Was looking for a test towards value high from the prior day right up here and a rotation down. And then the secondary hypothesis was for the market to rotate down into the MCV again in September prices. That would be 21.79 1/4. Now, here's a twist to today. I roll forward to December today because it's officially with the exchange rolls over, my data feed rolls over, so I roll over with that. I am using December as the front month starting today, so this trader bite will be built on December data. However, we're reviewing September, the September contract, September prices. If you look on Twitter, you'll notice this chart that I put up that shows the difference between the two. Here it is. This displays the difference between the December and September contracts. December prices go down 6.5 points to be adjusted in the ES, and I give you the other US indices. So all prices from September that I'm referring to will be 6.5 points higher in your September charts, and so it's going to be tricky today. But today's the only day that happens. The rest of the world or everybody will have rolled over if they roll over on volume to December by tomorrow morning. However, I am quoting December starting today, and we're reviewing yesterday's work, which was September. And so yesterday's trader bite on Hypo 2 expected a test down into the confluence area, which is 21.79 1/4 for the MC point of control, the most important price in the area, in addition to the low volume node that was left behind on Tuesday, and then the expectation is the market starts to turn up to 21.90. What the market actually did, and again, I remind you, we will be looking at December prices here. The chart here shows instead of 21.79 1/4, you'll see 21.72.75 because this chart has already been adjusted for the December contract. So let's adjust this OS. Beautiful. And so it shows 21.72.75. Remember, the primary hypothesis is to test up into the value high. It ended up pushing a little bit higher. It pushed through the prior day's high by 2 ticks, and then it rotated down into 21.72.75. The expectation was for it to pull back and attempt lower. It didn't do that. It accomplished Hypo 1. Hypo 1, but it didn't. We didn't get the continuation. The overall test of 72.75, or yesterday 79 1/4, was successful. It gave us about the planned trade was about 6 points, 6 points of range for the primary target on that planned trade, and it ended up pushing a little bit farther, and from the high, it gave you more than 8 points, which nobody, we don't want to try to catch the high, but that's basically what we got yesterday. Oh, and an additional thing you need to note is do not pay attention if you roll forward. Actually, even in the September contract, the delta, this chart down here, which is also based on volume, is going to be misleading during this rollover period. So today and tomorrow, the delta is going to be tricky. Why? Because you have calendar spreads. You have people who have to get out of September and get into December. And so they're going to use a calendar spread, or they may use an auto spreader that is hitting the bid and lifting the offer in December, or lifting the offer and hitting the bid in December to take a position from one contract to the next. And what that does is it affects delta, and that delta is not necessarily the intention of the traders to take a directional position, which was what we look at Delta for, but more to roll over, more of a technical requirement, so to speak. So be careful there. Don't put too much trust into Delta today and tomorrow. We should be back to normal on Monday. So that's what we did today. Yesterday we migrated the point of control higher. This is the a few people wrote to me and said, wait. Why would your primary hypothesis be to rotate back down? Why wouldn't you expect the market to go higher? The market did start going higher yesterday in the morning before it started to roll over. Transports led the push up, and the reason I'm doing this is because the prior day tested a key level, 21. If you remember, in the old contract, 21.86 even, which is now 21.7950, was the MCLVN, or the low volume node. So this is the thin area, the thinnest area above. And the market accomplished that and got there. And the expectation, and the reason Hypo 1 was an expectation to pull back down to the point of control right back here. So the market comes up, generally tests the point of control, pushes through it, chops around it like we did this day here, chops around it. If it rotates up, it generally moves to the low volume node, the lowest volume node in this case, 21. I can do a better job drawing. 21.86 was in the September contract, 21.7950 here, pushes up, and then the next, the expectation next is to pull back towards the point of control, base, find its buyers for the next push through, and then once it pushes through, the expectation is it pulls back around the MCLVN for a further base to continue higher. And yesterday was the pullback day, and that's why that hypothesis came in, and the market was compliant with it. It didn't have to be, but it was. And that's why the primary expectation was for a push down into the MC point of control before anything else. So that's where that comes from, in case you're wondering. So overall, as we push forward, we're starting to fill in the upper side of the high volume node. As you can see, as I scroll forward on these profiles, we're still in the balance that we've been in since July 12th. But overall, the market is likely to be fairly choppy today. Looking at the overnight session, again, another thing to be aware of, the overnight session here has 22,000 contracts because I'm looking at December already. The September contract probably has a lot more volume than that. I don't have a quote for that right now. I'm not looking at it. But I cannot use this overnight volume to determine what the overnight session is doing, but the overall action is similar. Remember, the market is arbed across expirations, especially on rollover. So the price action shows us what's happening, and it shows the point of control being down below 2178. That may or may not be correct. But overall, not much to glean from the overnight contract. It shows that it tested higher and it failed and is pushing near lows. The expectation this morning, the primary expectation this morning is if it opens right in here, it would be opening against the point of control in value, in range. The expectation is for a test lower initially. I'm looking for it to base against yesterday's 21 in the December contract, 21.7550, 21.76, and I'm expecting it to start pushing higher to 21.83. If it's got more energy in it, I expect it to pull back and start pushing towards the all-time high of 21.85. That is your primary hypo. Let's get it. Oh, that was really bad. So that's what I'm looking for Hypo 1. Again, this is Hypo 1. Okay, square is better than a triangle. On Hypo 2, If we don't, if we get an initial push up out of yesterday's range, just like we did yesterday, we pushed yesterday's high by 2 ticks, and we have somewhat of a failed auction. We will likely rotate back down to the 72.75 base and then look for the same exact thing as yesterday. This is a less likely play. I believe the market is ready to start its push higher, and we'll see how that goes. Anyway, those are the two primary ideas. I want to remind you that the short-term trend has reversed and it is up. We're one time framing up, higher low, higher low, higher low. There's no expectation of it change. You know, if it does change, this low is going to be very important today, 2171. Keep an eye on that. It ends the one-time framing up. That's something to keep a watch for. Okay. Remember, I'm quoting December going forward. You don't have to roll when I roll, but all of my posts and stuff are going to be in December. Take care.